The economic carnage continues. Hey everybody, my name is JJ. You're watching Bull, Boom, Bear, Bust. Today's Thursday, August 26, 2021. Today we're going to talk about the eviction moratorium, manufacturing, and some other very important updates that I think you need to be aware of that we need to keep in mind here as we continue to just watch the deterioration and the failed recovery here in the economy. And more clues just keep popping up every day that this thing is nowhere near reversing course. And in fact, things are just getting worse. I wish that wasn't true, and I wish I had better news to bring you. Now, let's start here with the markets because we are past closing time today. The closing bell rang just a few minutes ago. We ended up in the red on most indexes, but not very much in the red. We see the NASDAQ down about 43 points. But the interesting thing is, we continue to see this disconnect between the real economy and Wall Street. Right? You would think at some point they would try to hide it and maybe have the markets go down some, but no, it's propped up, it's pumped up. We have actually the money printers and institutions with access to the Fed window buying up tons of stocks. We have the Fed trading desk, the plunge protection team, etc. Who knows what they're doing behind the scenes? The bottom line is the markets are still going up. And they'll go up until the deciders decide it's no longer in their interest to have the markets go up. But 401ks are going up. The problem is, are people getting gains out of these increases unless you're a trader? Is the average Joe getting enough gains out of the markets here to keep up with the rising cost of living? Well, I'd guess 90+% of the cases probably not. Probably even a lot higher than 90% are not actually seeing the gains, big enough gains to help them maintain their current standard of living without going into further debt. Gold, silver holding fairly steady. Oil dropped again, so down to about just under $68. Are we seeing lower gas prices? Well, let me know what you're seeing. I'm definitely not seeing cheaper gas here in California. We're still between $4.20 and $4.50 at most stations here in Southern California anyways. We always have to look at the bond market to see what type of market support is being applied here, and we see that it did go up a little bit, but just a 1% increase. We're still at 1.36%. They cannot let that go up because the mortgage rates will be affected. If mortgage rates rise very much, you're going to see a drastic fall off in the housing market. But not necessarily, because institutions could always come in and buy up the homes that the people can no longer afford. And remember, institutions, a lot of them have trillions of dollars in liquidity that they can go out and buy homes. And does anyone want to take a guess at where the institutions obtained the funds to be such aggressive buyers? I think you know. It's debt, it's margin, it's fake money, digital money created out of thin air. Now let's jump over here to the CNBC article. The Great Resignation is likely to continue as 55% of Americans anticipate looking for a new job. So why are so many people looking for new jobs? This is a pretty big number. Well, it's likely because they're simply not getting paid enough to help them keep up with the cost of everything. Right? If you're paying your bills and you're not stressed out, you're not worried, most people are pretty happy at their job. Nobody likes to go out and learn a new job, put in applications, all the stuff that goes along with starting a new job. Why are most people looking for new jobs? I think it's just the financial reasons behind it. Most people are not getting by. They know they need to make a change. The problem is the U.S. service sector economy, 70% plus leisure, hospitality jobs, service sector jobs that are not maintaining or helping people maintain what they need just to stay alive and pay for housing and everything else. All right. Also, you have to factor this in. There's a lot of people looking for better working conditions. A lot of people want more flexibility. Now we have a lot of kids that are in school part-time or not in school at all. More people choosing to homeschool, so people are looking for work-at-home opportunities. There's always a lot of people doing that, but I think even more so now. Let's talk about this right here. U.S. manufactured goods orders dip in July. Well, we don't manufacture, when you compare it to consumption, we don't manufacture much. It's mostly consumption. But even what we are manufacturing, this kind of shocked me. Really, it shouldn't shock me, but let's take a look here. manufactured goods ordered or dipped in July, but take a look. Orders from the military prevented a much bigger drop, with a over 20% increase in the defense capital goods orders as part of that total spending. So imagine if it wasn't for the government buying up manufactured goods, in this case for equipment, and what's happening in Afghanistan right now. That's a whole nother nightmare. We'll try not to get into that too much. Wonder why nobody wonders where we can come up with unlimited amounts of money for quote-unquote defense, but then they tell you they have to take more of your paycheck to pay for the infrastructure bill, to pay for the roads, to pay for the libraries. Doesn't anybody ever wonder why it's like that? Why is it set up like that? Right now, let's transition a little bit. This is the weekly unemployment number. We'll look at this each week. Here we are again, 353,000. And let's multiply that by 4. You're over a million. You're about 1.2 million. Actually, 1.4 million. So 1.4 million new jobless filings. And what are we, 18 months, 19 months now past the great shutdown recession from 2020. Doesn't anyone see this and realize what's happening, right? They're talking about it on the news, but they're not making it very obvious on how bad this really is. So even though more jobs, even though there's more people losing jobs and filing unemployment, more new jobless filings versus new jobs being created, what it looks like they're doing is they're making one number a monthly number for new jobs added. They'll show you that monthly. But then the new jobless filings, they put that out every week. So I think a lot of people aren't connecting the dots that actually more jobs are being lost. And that really the 25% unemployment is just going to continue to get higher. If you look at the real number, we're talking about shadow stats and the real method of calculating how many people are out of work. And what I like to do is talk to people around me, people I meet, family. My immediate family is sick of me kind of talking about it, so I try not to bring it up too much. But people that I meet, extended family, people that visit, I ask them, what do you think about this economy, the monetary policy, the monetary system? And it's really tough for people to wrap their head around, but this is the truth. At the click of a button, they could pay off everybody's debt. They could pay off everybody's, including loans, student loans, every type of loan, every type of debt at the push of a button, right? At the click of a mouse. So you might want to ask yourself why they're not doing that, right? All these late loans can be paid off. Every home in the United States can be paid off at the click of a button. And then, and only then, can you just give people a free place to live, because when the home's paid off, nobody owes anybody anything. But that'll never happen because, see, they got to have us all fighting with each other. Okay, one side says the landlords, can go ahead and charge as much rent as they want. The other side says, no, landlords can't charge anything. It's a human right, even though it's not their house. Well, what you do is you pay off all the debt, pick who gets what house. And I know that's a crazy concept and a crazy thing to envision. But look what's happening right now in this country and around the world. Is it any crazier? All right, people, thanks for watching the support. Stay well, stay safe, stay prepared, keep stacking.